So when you hear someone say the economy, what's the first thing that pops into your head? Is it the stock ticker scrolling by on the news, the interest rate on that car you've been eyeing, or is it something, I don't know, a little more personal, maybe even a little more chaotic? Well, as we look out towards 2026, it's becoming super clear that the economy isn't just one story. It's at least three very different stories, and they're all happening at the exact same time.
So let's just ask the question straight up. What is the economy, really? Is it this massive, interconnected global system, kind of like a giant chessboard for big-shot corporate strategists? Or is it something way closer to home, like, the actual numbers on your mortgage payment? Or is it a wild, high-stakes digital casino where you can make or lose a fortune in the blink of an eye? In this explainer, we're going to dive into all three. All right, so here's how we're going to break it down. First, we'll take that 30,000-foot view, seeing the world like a corporate strategist would. Then, we're going to zoom all the way down to Main Street to get a feel for what the economy is like on the ground. After that, we are stepping into the crazy world of the retail trader. And finally, we'll try to pull it all together and figure out what all this noise really means. Okay, let's start from way up high. We're talking about the world of the corporate strategist. To really get into this headspace, we're going to look at a 2026 macro brief from Accenture. And if you don't know, they're one of the biggest consulting firms on the entire planet. These are the folks advising the CEOs of massive global companies.
See, for them, the economy isn't about one single country or one market. No way. It's a huge global chessboard of data streams, complex supply chains, and of course, geopolitical risks. Every single move they make is about trying to navigate these massive tangled-up trends.
So for 2026, Accenture has flagged four really big themes for their clients. First up, multi-speed growth. Just think of it like this. Some parts of the economy, especially anything powered by AI, are going to be flying in the fast lane. But other parts, they're going to be stuck in bumper-to-bumper traffic. Second is geoeconomic fragmentation. I know, it's a mouthful, but it's really just a fancy way of saying the world is getting less connected. Countries are kind of building their own little economic sandboxes and fighting over trade and tech. Third, we've got a new competitive shock coming from China. As China really starts pushing its exports, it's going to create all new kinds of headaches for businesses everywhere else. And finally, re-emerging financial fragility. With interest rates where they are, a lot of companies and even some governments are really starting to feel the pressure, which makes the whole financial system feel a little more wobbly.
So what's the big takeaway from all that? Well, Accenture's view is pretty cautious. They're telling companies to plan for an environment that's modest, uneven, and challenged. In other words, yeah, there are some bright spots out there, but the chance of things going sideways is very, very real.
So, given this really complicated picture, their advice is actually surprisingly simple. It boils down to two things. First, get AI into everything you do, because that's where the growth is. And second, build up what they call enterprise resilience. Basically, your company's ability to take a punch, whether it's an economic downturn, a political crisis, or even a climate disaster. The message is clear. Be ready for absolutely anything.
But all this high-level strategy, all this talk about global economics and corporate resilience, it doesn't just stay in the boardroom. Eventually, it filters down. These global trends always hit home.
So let's see what that looks like. Let's bring this whole conversation right down to a personal level. Forget the global boardroom for a minute. Let's pull up a chair at the kitchen table. And for this point of view, we're turning to Forbes and their look at the 2026 U.S. housing market.
And this is exactly where those big global trends start to feel real. These tiny little shifts in the big economic picture can make a huge difference in our actual wallets. According to Forbes, just a small dip in mortgage rates meant that the monthly payment on a typical home was over $100 cheaper in late 2025 than it was just a year before. And that's not just a number on a chart, right? That is real money back in your pocket every single month.
And this number right here, this perfectly captures the story for homebuyers in 2026. The forecast for national home price growth is a slow, steady 1% to 2%. So for the average person on Main Street, this is not a story about booms or busts. It's a story of really gradual change and pretty tight budgets.
And that really leads to the core piece of advice from this perspective. As one expert put it to Forbes, trying to perfectly time the market, well, it's basically a fool's errand. The best time to buy is when you find a home you actually need and, most importantly, one you can actually truly afford.
Okay, now I need you to brace yourself for a little bit of whiplash here. We are leaving the calm, sensible world of the housing market, and we are stepping into a universe that plays by a totally different set of rules, the world of the retail trader, seen through the lens of the infamous Reddit forum, Wall Street Bets.
So if you've never been, r/Wall Street Bets is a community of over 3 million people, and they basically treat the stock market like it's a team sport, a comedy club, and a casino all rolled into one. I mean, their official motto says it all: loiter and lose money with friends.
The kind of economic analysis you find on Wall Street Bets can be, well, let's just call it unconventional. Take this user's take on the huge SpaceX IPO. You are not going to find a careful discussion of price-to-earnings ratios here, no. What you get is a raw, skeptical, and very, very profane gut check. This is pure casino floor energy.
But then, just when you're about to write the whole thing off as chaos, you find a post like this one. It's a sober, detailed, and honestly, a surprisingly sharp analysis of Amazon's cloud business right before an earnings report. It's packed with real industry knowledge about things like custom silicon chips and enterprise contracts.
And that's the whole paradox of the place. This is an economy of total extremes. On one side, you've got the YOLO, which is an all-in bet of at least 10 grand on some super risky options. And on the other side, you've got these incredibly deep due diligence posts that could honestly rival what you'd get from a professional analyst. It is, somehow, both a casino and a think tank. So, okay, we've seen the strategist playing this global chess game. We've seen the homebuyer carefully crunching the numbers on their monthly budget. And we've seen the retail trader just looking for that one rocket ship to the moon. 3 totally different worlds. How do we even start to make sense of all these competing realities? Well, let's just put them all side by side. You've got the strategist who's laser-focused on AI and resilience to get through all the global uncertainty. Then you have the homebuyer who's all about personal affordability in a market that's just moving along slowly. And then there's the trader who lives in this wild world of high-risk bets mixed with incredibly specific deep-dive research. And this right here is the most crucial point. These aren't just different opinions about the same economy. For the people living inside each of these stories, they are fundamentally different economic realities, and they are all coexisting in 2026. The economy isn't one single story. It's all of these stories happening at once.
And that brings us to the final really big question. In a world that is just overflowing with signals from corporate strategists, from real estate agents, from anonymous users on Reddit, all of them telling you what to do with your money, how do you possibly navigate all that noise? And maybe more importantly, in this collision of all these different economic realities, which one is yours, and how are you going to choose to live in it?